Hey everyone, welcome back to FX Limit. If you're just starting out in Forex trading, I know how overwhelming it can be. Charts everywhere, dozens of indicators, news releases affecting currencies. It's easy to get lost in all the noise. But the truth is, you don't need to know everything to become a profitable trader. What you need is a solid understanding of technical analysis and the discipline to apply it consistently. So today, I'm going to walk you through some of the best technical analysis tips specifically for beginner Forex traders. These are the exact principles that helped me avoid unnecessary losses and start stacking more winning trades. Let's start with the basics. Trend is your friend. It sounds cliche, but it's true. One of the biggest mistakes beginners make is trying to trade against the trend. They see a price spike and think it's a good time to short or go long, only to realize the market wasn't reversing. It was just pulling back before continuing the trend. To avoid this, always identify the direction of the trend before entering a trade. Use higher time frames like the H1 or H4 to get a clear picture. Are we in an uptrend, downtrend, or just ranging? Once you have that context, you can zoom into smaller time frames for precise entries. Now let's talk about support and resistance. These are areas where price tends to bounce or reverse. Think of them like psychological levels where buyers or sellers step in. If price keeps bouncing off a certain level, that's your support. If it keeps getting rejected from a level above, that's resistance. Combine these zones with candlestick patterns like pin bars or engulfing candles, and you've got yourself a powerful confluence. Here's another tip: avoid overloading your chart with too many indicators. It's tempting to stack RSI, MACD, Bollinger Bands, moving averages all at once. But too many signals can create confusion, not clarity. Instead, stick to one or two reliable indicators that complement your strategy. Personally, one tool I've been using that simplifies this whole process is the Apex Trend Indicator by FX Limit. It's great because it shows you the current trend direction across multiple pairs and time frames in one glance. It even alerts you when a new trade setup appears, complete with buy or sell signals and built-in take profit and stop loss levels. The signals are non-repainting too, which means what you see is what you get. No false hope or redrawn signals after the fact. And what I like most is that it's beginner-friendly. You don't have to figure out where to enter or exit. The system lays it out for you clearly on the chart. It's like having a professional trader on your screen, guiding your trades. Back to the tips. Risk management is everything. Never risk more than 1 to 2% of your account per trade. I know you want to grow fast, but trading is a marathon, not a sprint. Use proper lot sizes, calculate your risk based on stop-loss distance, and always protect your capital. And finally, keep a trading journal. This might sound boring, but it's how you improve. Write down why you took each trade, what happened, and what you could have done better. Over time, you'll notice patterns in your behavior and your results. And that's where real growth happens. So, to wrap up, follow the trend, respect support and resistance, keep your chart clean, manage your risk, and never stop learning from your own trades. And if you want a bit of help making sense of the market, tools like the Apex Trend Indicator can give you that edge without the guesswork. Thanks for watching. If you found this helpful, drop a like and subscribe for more tips from FX Limit. Happy trading and stay consistent.